Hey everybody, Sive here with the Forex Peace Army.com. Let's take a look again on the gold market. You can see here we do not have as drastic changes as on the euro currency. Mostly everything remains the same as we discussed in the previous session. And trading plan that we created yesterday with a possible downside retracement from the resistance there around 37.6 has worked. But currently we need to decide what to do next, because overall performance that I see on intraday charts, it's a bit tricky. So I'm not too really impressed and actually fascinated with the things that I see here on intraday charts. But first, on a daily chart, you can see that our bullish grabber pattern is still valid. So this is directional indicator. That's why directions overrules trend by the MACD, which is bearish. This is just by the Jordan Napoli practice. So that's why we could say that context on the daily chart remains still bullish. And theoretically, we have to, or not to have to, but at least we could think about taking long position with the grabber. That's actually the things that we discussed yesterday. Potentially, this minimum target of this pattern is around the top. So market has to move back and just take out of the top in a different way, whatever it will be. So either just spike up slightly above it, some kind of the wash and rinse of the previous top, or straightforward upward continuation, which is currently less probable. That's the overall idea around this pattern. What is the tricky moment? Tricky moment stands first with the performance that I see on intraday charts, and second with the performance of the other markets. So if you take a look across the board, the 10-year bonds and in general yields on the United States are rising. Dollar is also rising, so it's definitely not the issue of the safe haven demand and not the issue of the possible government shutdown. Otherwise, the yields should dropping, not rising. Next one about the gold itself. On the 4-day time frame chart, take a look. Market still stands around the same fib support that we discussed recently. We talked about this with this downside ABCD agreement support here. And the bounce, that's actually the grabber that we have. And our idea was to take the long position on the retracement inside of the grabber candle. So that actually what we have got yesterday. But currently you could see that market is turning to forming the triangle consolidation. So after the downside action, it's a bit increasing the risk of the grabber's failure and suggests a further downside continuation here. So that's the tricky moment round, because market, you can see, can't start bouncing up from the support. It's just trying to collapse once again and just laying upon the support area, which looks moderately bearish. So what in general we could do currently? The grabber still exists, so nominally we still have it in place, and who knows, maybe it will work. We're coming for the weekend. On Monday it might be absolutely different background on the markets. Who knows what will happen in the weekend. That's why if you have taken a long position here, you probably could hold it and see what will happen. If you still would like to take the long position with this grabber, don't hurry up. So take a look on the 30-minute chart. That's, by the way, retracement that started precisely at this area drop. So if you would like to take the long position, trying to take it as closer to invalidation point, which is a point of the grabber, as possible. So here we have bottom of the triangle, right? So if market today, for instance, will move slightly lower, maybe you will get Gartner's triple to buy here, right? So which is also possible, something like this. You could try to use it. Just try to minimize your potential risk here because of the trickiness of the price performance around it. But it doesn't mean that you should ignore this pattern and it is dangerous to trade it. Absolutely not. But overall situation here is not as well perfect as it might be, for example, in some different scenarios. This is also important stuff. Here you can see some trend resistance. So if market will break it up, maybe it will be more confidence with the grabber, right? So that starts working. But we have the pattern. You could decide about whether to deal with it or not. From the bearish point of view, taking the short position here until grabber is valid, I wouldn't consider it. The one thing that you could do is the same as we discussed yesterday on the Bitcoin market. Since the bearish context come in play when grabber will fail, you could try to use, for example, stop sell order somewhere around 37.15, 37.20. So for instance, if market starts dropping, your stop order will be triggered in the moment of the breakout of these lows, and you step in this trade. And at this point, when the grabber is still valid, I wouldn't consider taking the short position. Sometimes using of stop entry orders is really great. So it works really great because it will stand unfilled until market will touch it. If it starts upward direction, it just will be unfilled. So you will not risk anything. That's the attractiveness of this technique. And that's probably all that we could do today to say about the coal market. Just let's keep watching and see what will happen.